In this video, I'm about to reveal some secret to you guys. Very simple strategy to make millions out in the market with a very low risk. Just wait for it. I'm gonna show you guys. Right. So a few days back, I shared this strategy with my student at the trading floor, and I'm happy that I can see the result and they're practicing it. Right. So I'm gonna share a trade which was taken by one of my mentees today, and the trade was exactly the strategy that was taught, right? So I thought to share it to you guys on this YouTube channel, whereby you guys can also use it to make money out of the market. Simple strategy. Now, what's the strategy? Trend line. I'm sure most traders are aware with trend line. They are familiar with it, but like not everybody is able to use it appropriately. Not every trader know how to use the trend line well. But in this video, I'll show you how the trend line is being used, the factors that consider the trend line movement, right? Now, this is the mentee account, right? This is my mentee account. It's currently trading MFF, right? And it's on the second phase of the MFF right now, right? So this is the trade it took today. The New Zealand card trade, which he shared with me, and I accepted that the strategy was right before he took this trade. Then we figured out the take profit and the stop loss on this trade. Actually, the risk on this trade was just, I think he risked 12 pips based on his entry. But initially, if he had entered from our initial entry we planned, it was just about less than 10 pips risk actually on this trade. He used about 2 lot size and he was able to make good money out of the market. Now this is about more than $500. Almost $600 he made in the market with this simple strategy. And you know, this is trading 20k MFF account. So with this now, he just needs to make like 400 more to pass his second phase of the MFF account right now. So I'm going to show you guys this New Zealand cards trade that he took. You can see there he smashed the take profit, and also show you a little about the SMC strategy, the smart money concept strategy. Though we're not there yet to talk about that, I'm just here to show you the trend line strategy. So let's jump on this strat straight away. Let me quickly show you guys how it's been done, how you can make the millions out of the market with it, right? And also apply your risk money management always. No strategy is 100% assured, you know. So let's get to the charts. So yeah guys, this is the chart view of the strategy, right? As I said, simple trend line strategy. You already know whenever you're operating on your trend line, the only thing you need to look out for is, first of all, is the 2 higher high or 2 recent high or 2 recent low you need first when it comes to you operating with trend line, right? Then the third touch is going to be your entry, or a point of execution point for you as a trader. The trend line is more effective when it happens on your third touch, or more touches can happen, but like the most effective one is the third touch, which exactly happened there. So let me take this chart barcode and share this trade exactly with you guys, right? How we concluded on this trade from here. Now, as you can see, right, as you can see the chart here, this is 15-minute time frame basically, right? First of all, we already discovered that the trend of this market majorly is been bullish recently, yeah, but like a reversal is occurring recently, yeah. So first of all, we already found this higher high, which is the recent high, the higher low, which is right here. Now, the market has already came back up here, right, which is another recent high that we are having recently, yeah. But the third touch of the trend line, you can see right there that the market has not touched the third touch of the trend line yet. We didn't have a third touch yet, but the market has recently come back to this area, but didn't unfairly fail to touch the line. So basically what we were waiting for at that point was to see the charts probably make a reversal and come back to this line. So at that point, as this market we were waiting, let's make a quick play. As we're waiting for the chart to come back to that area, yeah, as you can see right now, yeah, the market eventually came back to this zone and touched the third touch of the trend line. So that was the first confirmation for us, right? Likewise, if you can see, if you understand what chart pattern is, right? If you can understand, or if you know more about chart pattern, you can see that this chart pattern that we have here is simply called double top, right? Now, if you have a double top at the third touch of the trend line, it's confirming what? A bearish movement for this market. So basically, we already took this sell after this candle was formed. This doji candle here was formed. We took the sell after the doji candle here was formed. It shows like a rejection from there, though we still put in our stop loss above it a little bit. That is why in the market, you always need what? You always need to figure out your risk management. It's very, very, very important, right? Your risk management always important in the market, right? So the entry got from here, and you see the risk here. You can see the pips, less than 10 pips, as I said earlier. But unfairly for him, he got the entry around somewhere here. Yeah, exactly. After the closure of the bearish candle, which was the bearish engulfing that we have there. So he got about 12 pips stop loss, which, and you can see he used one lot size for him. One lot size, that means assuming this trade has gone against him, he's going to be losing like $120, right? So he has more opportunity here, he less to risk, and he made good money out of the market. So how do we figure out the take profit? So initially we were watching this low, because we have major lows right here. Now these are the lows that we have recently right here. So all we were waiting for was this low to be taken out, right? To confirm the downtrend, the movement to keep pushing down, right? So we waited and see that the low was broken, this support level was broken, or you can also call it demand level there. As it was broken here, then all we did is we target this. This should have been our take profit initially, but looking at the moment, we already know that this level is easily to be taken out, right? So what we did is we target this other block that we have here. You can always call it support level or demand level as well, but like he rejected from the other block. So let's play the chart forward. Sorry, the network is... Now let's play the chart and see the movement. You can see this is the moment when the lower got broken, right? You can see it made a little retest before the market actually pushed down. After it was broken, after the support was broken right here, made a little movement back and pushed to the downside, right? Now, when the market got to this other block, we already know that, okay, there's a possibility for a rejection from there. So we could have actually taken the buy, but the markets then, it wasn't like during the time session for us to take the buy. So we just left the chart and we took the profit. The take profit got smashed. And now, what are we currently doing on the market? After the market rejected from this point though, what we can do is we're trying to find the retracement of this trend, of this recent trend right now. So now, the retracement of this recent trend, what we just simply do is applying Fibonacci to the market currently. Now, we are applying Fibonacci to the market, applying from the recent high to the recent low. Now, we have 618, basically I use 618 level, right? Now, the 618 is currently here, right? So, another sell entry from here to continue the downtrend of this market. So basically, if the market drop from here, we're going to see it taking this low out of the market. This is a return chart, right? Taking out, this is where the current price of the market is right now, yeah? But the seller has been taken from 618, right? But New Zealand section is going to be like 1 a.m. or 2 a.m. Nigerian time. So let's say the movement in London section, right? So what I'm expecting is this. A little bit back push up, then possibly come back down and find its way to the downtrend. But let's see the moment how it goes. But like the entry has already been taken off the sell, right? And the stop loss is just on the 7179. If this is taken out, that means like it could possibly come back to this resistance that we now have here, or this previous double top. Now, looking at this trade, this is just a simple trendline strategy you can always apply in. All you need is to find the recent two lows or two recent high in the market. But make sure like you find the trend of the market first, which is figuring out the market structure of whatever chart you're analyzing, right? Whether it's bullish trend or bearish trend or ranging market, that will help you in figuring out the possibility of the movement of the market. And as well, right, if the market has eventually broken above the high, yeah, that means what? That will have given us opportunity for a buy. So what could have happened there, assuming this chart has broken above, you could have pushed like this, make a retest back here, and continue moving back to this resistance. That could have been the possibility. Either ways, your third touch of the trend line is always a point of execution for you to look out for, right? This strategy can make you good money out of the market. Try as much to practice more on it. So make sure you practice more with this example I've showed you. Check the previous chart and make sure you practice and practice.